Well, so much happening as we move into the summer stretch, sometimes sleepy, but not right now for investors who are tracking what's happening in the Middle East and also trying to figure out how central banks like the U.S. Fed are going to navigate all the uncertainty. We have a Fed decision later today. Seth Merrill is Chief Investment Officer and a partner at Crewe Advisors and joins us to talk a little bit more about the tone of the market. Seth, nice to have you with us. What's been top of mind for you recently?
Thank you, John, for the invitation to join you this morning. So what I've been looking at is how unprecedented the impact of the Trump administration's work this year has been on markets. When you look at how many executive orders the Trump administration has signed this year, it's really been something that we haven't seen in markets before. So Trump in his first administration, in the first 100 days, signed 33 executive orders. Biden then in his first 100 days signed 42. The Trump administration this year, Trump had 4 years to sit back and think about what he wanted to do if reelected again. And mulling that over, he came out of the gates and has really turned markets upside down, trying to figure out what the long-term impact of all these actions will be. The Trump administration signed 143 executive orders in the first 100 days post the inauguration this year. That is 4 times the number Trump 45 did, and more than triple the amount the Biden administration did. So one thing that markets really like is certainty. What they have not had this year is certainty, as they try to parse what this flurry of executive orders means for the intermediate and long term.
So when you add up all of that action from the White House and try to turn it into actionable activity for one's portfolio, what have you been thinking about?
That's a really interesting question. So if you look at the market as a whole, the market has really punted on that question. I don't think I've seen less attempt at security selection in my 25 years investing. If you look at the level of S&P sectors at the end of 2024 and look at how much they dropped when that tariff set of discussions started, you see that the markets just sold off fairly indiscriminately, but some sectors selling off more than others. So technology was down between 20 and 25% from year end to April 8th, the bottom this year, whereas healthcare was only down 2%. But when you look at the rebound coming out of April 8th, what you see is that investors didn't attempt to discern value from dross. They just bought in the exact proportions they had sold in the previous 2 months. So the rebound has mirrored almost exactly the drop going into April 8th when you look at the last 2 months. So that is what I would call a proverbial wait and see approach from the market, even if investors are actively waiting to see what to do next.
And we're almost out of time, but one of the things for everybody who's watching all the complicated things taking place in our world right now, one common theme is that technology on the battlefield, quite frankly, is changing. And I saw that you had talked to our producers about the concept of defense being a technology industry. Can you explain that a little bit?
We think about defense as being growth and transformation, but that is defense today. If you think about the miniaturization of warfare, drones today can be mass-produced, dumb kamikaze-type drones at a value of about $1,000 per kilogram of explosive payload. If you look back at the Reaper 20 years ago, that was about $20,000. So it might cost $3,000 to $5,000 if you want to add AI, control, guidance, things like that. But by some measures, it's 75% cheaper to build them today than it was in the past. When you lower the price of something, you increase the demand for it. And so we may see the demand for conflict increase because of the lowering of the price. Defense is a technology industry. I would look in the small and mid-cap space, not in large caps, because of higher growth profiles there.
And is that kind of a global story? Is that small and mid-cap American-based defense companies?
Yeah, I would especially look in the U.S. at that difference, because in the U.S. you have 5 defense primes who have really been encouraged to maintain market share by the Pentagon. But then you have a lot of AI technology new innovation happening in the mid-cap space with higher growth profiles in the same multiple.
I have about a minute left, Seth, and so I just wanted to get your perspective. We do have a Fed decision today. Nobody's expecting the Fed to make a move on rates, but I think everybody's trying to figure out how the Fed feels about cutting interest rates later this year. On the one hand, certainly there is a camp of people who feel like there are growing signs of a cooling economy. On the other, you've got people who are seeing some signs of resilience for the U.S. economy, and then add to that some of the inflationary complications, which maybe get more complicated if oil prices stay elevated and all that jazz. So what would you be listening for today?
It's a really excellent question, John. We think all the time about the speed of monetary transmission, but I think what investors are watching today is for the speed of fiscal policy transition or transmission. When you think about all of the tariff negotiations that have been happening, investors are looking for when those will start to have an impact in inflationary numbers. The Fed is going to wait to see what inflation looks like, monitor economic conditions. The summary of economic conditions will come out today. So until we see the impact on the real economy, investors are going to continue to wait and see.